What does the Iran and Israel conflict mean for mortgage rates? This is a major question right now, and I'm going to break it down next. If you get some value out of this, or you like what you hear, or you want to schedule a call with our team about how to navigate all this confusion in the market, make sure to subscribe to the channel, hit the bell for notifications, and you can schedule a call with the link in the comments. So we saw this conflict happen over the weekend, which is very sad on many levels. And the inevitable question that comes up is, what is this conflict going to do to the economy in the U.S. right now? And there's really two schools of thought on this. One is that some people are speculating this could cause mortgage rates to go down, while other people are viewing this that the Fed may even further slow down their rate cut plans for 2024. So here's what happened so far last week, but this could go either way here. We really don't know. And the CPI data got released last week, the Consumer Price Index. And that's the cost of things people buy, the cost of goods sold. And that came in 0.1% hotter or higher than where the projections are. And that sent mortgage rates up close to 7% and even hitting 7% in some cases at the end of last week. A couple weeks ago, we were looking at 6 3/8, 6.5. So mortgage rates shot up a little bit after the CPI data came out. And what's going on with this conflict between Israel and Iran, there's now even more caution about what's going to happen and what the Fed's going to do at their next meeting. I don't see a rate cut coming anytime soon. And there's some people that think this might cause rates to go down or it could go up. What we also know is that after the CPI data, the 10-year yield jumped, and that caused rates to hit that 7% handle that we're seeing early this week. And there's a lot of things to unpack here, because if we're in this higher for longer rate cycle, then that could do feasibly two things. One, it could put people on the sidelines. The second is that it could cause inventory to continue to grow, because we've seen that active listings are pacing right where they were this week last year. We're at the same number of new active listings coming to the market. Nick's going to put a chart up here, and we're seeing that this data that 2024 is way ahead of 2023 in new homes getting listed. And all these people that were locked in are holding on. Well, they've got things happening in their lives right now that are causing them to sell. So we've also seen that the price cuts, the percentage of homes that have a price cut this year, a price adjustment, is at 32.1%. And compared to last year in 2023, it was 29.8%. And in 2022, we're looking at 18.8%. So we're seeing sellers are starting to get serious with adjusting their prices in line with where the market is. So if rates stay higher, what's that all going to mean? And when I see this happen here, what I'm clear on are two things. One, you got to let the rates settle out after something like this happens. There's always the immediate reaction, and then we have to see where it goes. What we also know is that the Fed is going to be monitoring this very closely, and we're in an election year. So I wouldn't bank on mortgage rates coming down. Maybe they get back into the sixes. I don't see fives happening like a lot of people have predicted at all, based on all these things that we're talking about here. We've got an international conflict. We've got home prices being adjusted. And we've got CPI data coming in higher than expected. So all of this tells me this is kind of the situation we're going to be in with the market. So what does this mean for people that want to buy or want to sell? Well, so if I'm a seller right now, I'm seeing inventory rise. I'm seeing rates go a little higher. I'd be accelerating my time frame so I'm not in a high inventory market when I do decide to sell, because you don't want to be out there when the neighbors are all listed. And if I'm a home buyer right now, what I'm looking for is homes with elevated days on market. I'm looking at prices aren't going down. That's the one piece of data that's very clear. So I'm looking at it that I'm buying in at a lower number. And when rates do come down, if they do come down in the future, once the Fed starts to cut, which they will come down at some point, that's your ability to renegotiate the rate. So you want to make the move for a reason that's going to benefit you and your household. Is your current home too small? Do you not own a property right now? These are the reasons why to buy a home, because you can start building that wealth over the long term. And we know that homeowners versus renters have incredibly higher net worth when they get to retirement age. We're talking about hundreds of thousands of dollars. So despite all these things happening here, I'd be taking my time, I'd be getting informed, I'd be having a strategy session or a planning meeting with a local agent to make sure that my needs are being met and these people are hearing what I'm saying. Even in the face of all this conflict, the best thing to do is get informed and then use that information to make a decision that's going to work for you and the other people affected by whatever real estate decision you're considering.